Korean Kospi market. It's up 1.9%. So strong up move seen.
Pentagon's European command says the Russian airplanes targeted an unmanned American MQ-9 Reaper drone that was...
Right, that's the first tick on the Nifty, by the way. That's the opening rate. Looking pretty good, up 160 odd points.
I mean, equity markets actually having a ocean of calm, I would say, compared to what's happening in the bond markets globally.
That early morning gap up opening above 17,200 has not held, and some amount of profit booking has set in.
What we gather now is that there is a roadblock in this particular transactions.
Total monthly charge for a family of 4 is only 696 rupees per month.
Ambuja Cements and ACC are owned not by the Adani Group, but by Vinod Adani-controlled entities.
The sensex have given up all of the morning gains and are currently absolutely flat.
You're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, as always, my colleagues Rima and Surabhi. Guys, hi.
Good afternoon. Hello.
Hello, afternoon. What a turnaround, right? On the way down. Didn't look like this in the morning.
It didn't look like this in the morning, but it's flat, right? I mean, let's just have the Nifty up and see if it is flat indeed, because things are changing very, very fast. Absolutely flat right now. What, 7 or 8 points change? So the point that we were making in the morning is that the market on the Nifty needs to trade above the reversal level, which is 17,220. Guess what? I mean, this happened in the first 60 minutes of trade, first 30 minutes of trade, basically. We got to almost 17,220, 17,211 is the day's high, and then reversed. So, I mean, I think that becomes an important level above which you got to have the market trade at least for a couple of hours for people to feel confident that the bounce is not going to be sold into. That seems some distance away, but let's see. Now, overall market breadth, though, is not very bad. I mean, actually, market breadth completely was looking very, very strong in the morning. It's not as strong, but you've got the mid-cap and small-cap indices, both which are trading higher. Metals are a top gainer, and again, this is as we were sort of outlining in the morning. I'm presuming on the back of Chinese data, which has been very strong. We had industrial production numbers and a few other things for months of Jan to Feb, and they indicate a very strong rebound in China. The index is up 2%, by the way, and FMCG index is the top loser. We'll probably tell you more about that as we go along. El Nino, etc. worries. There is more and more chatter around it. That's the lay of the land right now. On the global front, at least over the last few hours, we've not had anything new to disrupt things in any meaningful way. But I think one can be assured that that will be a continuous stream of news flow, good or bad, but we will get that as we get closer to the US market open. Rima, hi.
Hi. So right now, European markets are in the red. The CAC is down about 0.6, 0.7%. The DAX is down about 0.25%. So the Indian markets really haven't had any good day, right? Yesterday, the European markets and the US markets ended higher. So at least they had one day of a rebound. But the Indian markets haven't even had that, given the way we've fallen from the top of the trading session. Today was supposed to be that day of rebound, so we started off higher, but now we're absolutely flat. And from the day's high, 170 points gone. The level to watch will be yesterday's intraday low. Now, yesterday, the Nifty's intraday low was 16,986.87 thereabout. So almost 16,990. We're about 50 points above that level, but on the way down, that's going to be a level to track. The mid-caps will be so far are holding up, but we've got so many individual movers, right? Stock-specific action.
Yeah, absolutely. And that's the silver lining of today's trade, that at least the mid-cap market still is seeing some bottom fishing that's going on. By the way, the Adani group of stocks have had an interesting session. Most of them are on the upside. Adani Enterprises, in fact, is pushing a gain of about 7.5%. Green, transmission, power, about 5-6% up on a clutch of these stocks. And then you have the newsmakers right from the morning, like PVR, RailTel. So they're holding on to some traction. And some new names then cropped up during the course of the day. Ramkrishna Forgings. Some of this is a news-related play. IEX has been quite solid from the start of the session. So mid-cap gains are intact. But the problem for the market very clearly is twin-pronged. One is FMCG, and we'll talk about that, as Prashant said. And the other continues to be banks. The banking index is now down about 0.3%. So let's see how a lot of this plays out. Let's take it forward and then straight away get to our closing strategies. We have our experts lined up. Mitesh Thakkar is here to help us navigate this. Mitesh, so once again, this was a classic sell on the bounce or sell the rally sort of a day. What would you do in the last hour?
Good afternoon, sir. I think, yes, I think, 17,220 is what Prashant had mentioned in the morning as well. And I was looking at a slightly better level, 17,250, 300 zone. Broadly, this is a market which remains very oversold. It's trying to reverse, but has not fired a reversal signal as yet. So I think for the time being, and these levels of 17,000, 16,970 would be critical support levels on the medium-term chart. So my sense is that I think, we haven't got a clear directional bias. The reversal happens beyond 17,280, 300 for me. So we'll go long then, or we'll start shorting below 16,950. Till then, it's a choppy market. So I'm trading with more of stock-specific biases. I have, in fact, 2 buy calls right now. Page Industries is something which, after a big decline from levels of 54,000 to about 36,000, is now showing signs of a reversal. So that's a buy. Suggest a fresh stop at about 37,000 and target of around 38,500 here. And the other one is NMDC, and I think you were just discussing metals. China numbers were good, and the charts also in the short term are very positive here. So NMDC is a buy with a stop at 116 for targets of 122.
Some clarification coming in on Coforge. Remember yesterday we highlighted how some mid-cap IT companies like Coforge and Emphasis have an exposure to regional US banks, not the collapsed SVB, Silicon Valley Bank, but they have exposure to other regional banks where the market is just fretting about the possibility of some weakness. Not that there is any reason to panic right now, but the market is just, worried and a little anxious about that. So Coforge has clarified to that. They're saying we wish to call out that our exposure to revenues from the US regional banking clients is very limited. We do not see the current market events in any manner impacting our performance. We remain consistent with the commentary provided in the last investor call around our performance outlook, and we continue to target a robust outlook. So the management, Coforge, reiterating that their exposure is very limited and it's not going to impact their performance or their guidance in any way.
But staying with tech, Rima, KPIT Tech is the other one, right? I mean, the stock, I think, is up about 6-7% in a market which is not doing very much. What's happening here?
Well, KPIT Technology has announced a deal with Honda, where they will be powering Honda's software-defined vehicle, SDV it's called, right? That's a program which basically helps in imbibing software in a car. Now, earlier, your experience about driving was always dependent on the hardware, right? The power of the engine. But now it's increasingly dominated more by the kind of software which is there in your car. And the software can help you connect, communicate, automate, and personalize your experience. By connection would mean that the sensors on the car will now be feeding data real time to a cloud provider where they will analyze and give data back into the car, which will help perhaps in the assisted brake driving, ADAS as it's called. It will help in automatic braking. It'll help in personalization as well of what things that you require. So that the element of software in a car is increasing, and KPIT Technology has been playing in the software-defined vehicle space, and now they've tied up with Honda, where they're saying that this deal, this partnership, is likely to run till 2030, which means 7 years from now, and it could, by the end of its staff, close to 2,000 professionals, and that's a big number. What is key is that KPIT Tech has announced a second deal in the SDV space. 3 months back in November, they had announced a large $100 million plus with Renault. So, very quickly they've announced a marquee deal with another marquee player, Honda. Size of the deal is not known. The duration is likely till 2030. That's all the details that we have in terms of financials. But 2 back-to-back deals with large OEMs has got the street very excited that, KPIT Tech has got this SDV, right.
Software, hardware, and roads, right?
The problem right now is taken care of. The third piece we don't know as far as Mumbai is concerned. For that you have to pray.
All right, let's welcome in Prakash Devan, who's joining in. Prakash, great to have you with us here. Thanks very much for your time. You've got a flat to slightly sideways down market now, different from what we had in the morning. 750 points in 4 days flat. I mean, it's 4.5%. Quite a bit at the index level. What are you doing, Prakash, right now?
Good afternoon, Prashant. So, I think it's interesting times. while we continue to make ourselves believe that we are fairly resilient and insulated from what's happening in the US, we continue to lose and see markets sliding down, and particularly on the heavyweights. In fact, today's screen in the morning, which you alluded to, seemed more exciting given the fact that it was the broader markets that were participating. So somewhere, the money that's waiting in the wings, there is a lot of smart money that's gone out along with the ETF and FI flows. But there is a lot of smart money that's waiting to come into the right kind of sectors, the right kind of businesses. And I think the valuation comfort, remember one thing, this last 2 months of Jan and Feb and almost like the first half of March have not just resulted into, erosion in the multiples, but softening of the multiples, but it's also given time for companies to move up on the earnings side. Yeah, so I don't think earnings has been any drastically cut down for most promising businesses, most good sectors, and barring a few which are facing some recessionary aftershocks like chemicals and textiles and all. But I think what you want to see in March or post-March is a comeback of some sectors which have been lying low, where the P multiples have come down, have softened, where the earnings have actually moved up, continue to gradually move up. So that's where the market is. It's a very bottom-up market, Prashant. There is absolutely no clear trend that's emerging or semblance of some sort of a pattern in any sector or any group of companies. But what I think is likely to happen is the US will get tired of the US news flow because it's so intense. Every hour changes the dimensions, the dynamics of what's happening there. And then people will kind of, move on to look at, going back to earnings. And then that's what the market needs. Right now, the news flow has got everything other than earnings in the picture. So I would rely a lot on that, and some of these stocks in the gas space or some of these in the auto space, they are the ones that look quite promising. And it's the ETF outflows. I mean, I'm sure you spoke about FMCG being soft, but it's select FMCG that is losing ground. The likes of ITC, which didn't have ETF exposure, aren't seeing any kind of erosion, but the ones where money is being pulled out are definitely seeing that pressure. So it's going to be a balance of technicals and fundamentals. But yeah, definitely good stock picking days moving ahead. And I think till the month of May, when the earnings get digested from March, that's when you'll probably see this volatility continue.
Since we're talking stock picking, I just wanted to get your thoughts on KPIT. That's a very interesting story that Rima just explained to us. And what a mover, right? You talk about the bear market, recession, all of that. If you're in the right stocks, KPIT is what, some 3-4% off his 52-week high? Absolutely, unshaken, unfazed by whatever's going on. Your thoughts?
Absolutely. So we see, look at how this company's evolved. And I don't want to take too much time in going into history, which a lot of us know of. But the company just started as a simple energy conservation technique developer, which they started with the Revolo, product of theirs. And from there, they've come to a stage where they've tied up with the likes of Volvo, the BMWs of the world, and of course, the Nino SMV arrangement that they had was path-breaking. Of course, Honda is a much bigger play, given the fact that they have actually been waiting to get into some of these newer areas. They've taken time, but they probably do it in a very significant way because it's more of survival for them. So what KPIT has done is it's latched on to companies, OEMs, which will have to pursue this SDM path, irrespective of how the product performance goes. And I don't know about the longevity of this arrangement, but if Honda is looking at 2030, for the next 5-6 years, you have enough visibility of them partnering and bettering that. So this is great revenue generation. This is a market that's not very competitive. And once you latch on to something like this, it starts, helping the market reflect on the certainty of revenue for KPIT, and that's where
Prakash, can you buy? But Prakash, my question is, can you buy? Lifetime highs on the stock. Can you still buy?
Oh, absolutely. I mean, today, of course, there's exuberance around the news flow, but and KPIT, that's what I was concluding with, that we've seen the promoter sell and the market discounted that a bit badly, and then we saw again the revival. You have to buy these kind of stocks in the portfolio. I've been talking about it since about 260 levels, about 2.5 years back. It will give you, it will continue to deliver because of the space that is in. It's the Tata LXI of the auto IT this thing. And I'm sure Rima can tell you why the premiums don't come down for some stocks like this. except for when there's some block deal or something. But wait for those times. But don't take your eyes off the stock for sure. And buy it on days when there's not so much of exuberance as today.
KPIT Tech is up 49% in the last 1 year versus the Nifty IT index decline of 18%. So the extent of outperformance is more than 65% in a span of 12 months. Let's also talk about Ramkrishna Forgings. That's higher in trade after the company, along with Titagarh Wagons Consortium, has emerged as the lowest bidder for a railway ministry order. Sonia is here with the details on this. Sonia.
Well, thanks a lot for that. So it's a 52-week high, and this is a massive, massive order that Ramkrishna Forgings has bagged. Along with Titagarh Wagons in a JV, they have bagged an order to supply under the Atmanirbhar Bharat project around 15.5 lakh wheels, and this supply will be over a period of 20 years. Now, I had a chance to reach out to the management to find out what exactly this would mean for the business, and the company told me that there's a total outlay of 1,100 crores. That is the investment that they would have to make in this particular project. It will be split between Ramkrishna Forgings and Titagarh Wagons. Out of that, the entire plant will take about 2.5 years to set up. So the project will take about 2.5 years to set up. Initially, they will need about 300 to 350 crores, and the rest of it will be attained through debt, low-cost debt from a European bank. Now, what does this mean in terms of earnings for Ramkrishna Forgings? The company said that they've got a guaranteed order of 80,000 wheels from the government. The total revenue from this project per year would be 2,200 to 2,300 crores, and they're currently putting up a capacity of 2 lakh wheels for this particular order. So it's a new revenue stream for them, orders of forged wheels from the government. It perhaps could open up a gateway for more orders from the government's end, considering the government is going so big in the railway space, and hence the stock is up at a fresh 52-week high, up 7.5%.
Okay, thank you very much for that. Prakash, thoughts on Ramkrishna Forgings? This is also a stock which is very excited today. Yeah, go ahead.
I know. So Rima, it's a bit too excited. If you heard Sonia, it's a long-range change in its trajectory. Why it's welcome, the market see me very excited, as two reasons. One, Ramkrishna Forgings was always available on valuations which were not so demanding. I mean, I think on a trailing basis, we had 4,500 crore market cap, close to 17 times. But what it does is it kind of offsets the uncertainty and the volatility, cyclicality of its existing businesses, which are more auto-led. So what you need to read into this is that, yes, this is a company that's morphing into a very different animal. But then there's a JV along with another local partner, and it would take some time. There's a huge investment that will go in. So I don't think we need to get so excited. Except what's changing is the PE multiple. The EPS accretion is way far away right now. The corollary to this, Rima, is this development cannot come with just railways ordering wheels, right? I mean, there's going to be a lot more that will happen in that space. Look at something like Auto Axles, look at Bharat Forge. They are companies which are also in the same space, and they could start getting a lot of the railway, orders coming their way in their own respective domains. So I'm quite hopeful that some of these companies which have been doing very good work for a long time will also start seeing some sort of a shine come back. So Auto Axles particularly has been probably a backseat kind of a play, but it would probably start seeing some benefits come out of this entire order flow, which is evident now from this particular incident.
Okay, all right. What we'll do is we'll take a quick break here. Prakash, stay with us. We are down 21 points, 17,020. Aditya Sood of Incred PMS will also join us on the other side to take the conversation forward.
Welcome back. El Nino possibilities are rising in 2023, and India might see drought and below normal rains this season. Manisha is here with this forecast. Manisha.
Well, thank you so much for that. Still early days, but there have been various international and Indian agencies from meteorology as a department who have been giving out caution on this is something that you could perhaps be prepared for. Now, what is El Nino really? This is a phenomena which creates normal or above normal warming of Pacific Ocean. It's quite opposite to what La Nina is, which creates colder on surface impact there. Now, this is also known to negatively impact the Indian monsoon, and the markets are watching out for detailed analysis of this as we get
get into the month of April. As of now, the forecast is likely to gain accuracy in the month of summer. IMD also has said that they will come out by mid-April with their sense on where El Nino really stands. But just to tell you that El Nino is linked with poor rains forecast in the Indian markets there. And what data has shown us in historically, it says that 60% of a probability of drought is what El Nino brings with it. And also when you look at the other numbers, 30% probability of below normal rain, and there is just a 10% probability of a normal rain which El Nino brings about. It is quite negatively seen within the agriculture and inflation as a sector as well. It is linked with poor southwest monsoon also. It also means that you are looking at higher global temperature and perhaps floods in Australia is how it is read. When you look at the earlier El Nino years, those were in 2009, 2014, 2015 and 2018. And all of these years, you actually have seen below normals of monsoon coming in. The last 3 years have been quite good because of La Nina, but this year, there are already concerns coming in from this one. The international agencies have as of now predicted 50% chance of a second half of El Nino coming in. And just to tell you on what these agencies are, well, you have Australian Bureau of Meteorology, Japan Meteorological Agency, Bureau of Meteorology, US National Oceanic Atmosphere Administration. They all say that El Nino conditions are seen more than 50% in the second half. It might start evolving by the month of July and August, and that's exactly when the Indian monsoon season begins. The World Meteorology Organization also has advocated caution onto this one. When you look at India, well, Feb 2023 was the warmest in 122 years, and we are looking at SkyMet already warning about an El Nino possibility. According to them, it is 60 to 65% of a probability that you could be looking at El Nino. Well, the global impact already has been seen. We've seen the global average temperatures gain up by 0.2 degrees Celsius. And as of now, if you look at the overall number, it tends to be 1.08 to 1.32 degrees Celsius above the pre-industrial era.
Okay, Manisha, thank you so much for that. Recession, drought, banks blowing up. Could this year get any better, I wonder? But anyway, thank you so much for explaining the possibilities to us, and we need to keep this on board as well. In fact, let's get you another viewpoint on this, and actually this is a pretty big industry voice. Today, earlier at the B20 summit, Shireen caught up with Suresh Narayanan, Chairman and MD of Nestle. She spoke to him about the current inflation concerns. Now, Narayan says that food inflation continues to be a cause of concern, but he also adds that demand, at least for the time being, looks quite positive. Take a look.
I think the specter of inflation, especially food inflation, is still on us. We cannot wish it away, and we cannot assume that it's not going to be haunting us for a while. This clearly has implications in terms of price values, in terms of costs, in terms of incomes, expenditures, and all of that. Coupled with this, of course, the fact that we are a consumption-driven economy gives us a lot of hedge in terms of some of the global volatilities that we have, especially on things like fuel and other raw materials that we might tend to import over a period of time. For me, the agenda is really full with all the opportunities that I can unlock locally, and also with the overall consumer sentiment being reasonably positive.
Okay, so he's saying the consumer sentiment is still positive, but these inflation fears are obviously quite real. Prakash, I'm not sure if this is partly the reason why we're not seeing the typical rush to FMCG stocks that you see in periods of market volatility. This cycle is turning out to be different. Take a look at Nestle, HUL, Britannia, some of these names even today for that matter. How would you approach basic core FMCG over the next couple of weeks and months?
So, Surmi, as I said earlier, I think it's the impact on the stock prices of most of these players is more from a flow perspective. The kind of outflows that we continuously see does impact these companies because they're the last to go. FIs would pull out money from wherever they can at some point in time, especially in times of crisis and in the home markets. And the other thing about inflation is, I don't think there is anything new. Every summer we get worried about inflation. We, get worried about demand contraction at some point in time with the year. And that kind of starts reversing itself or balancing out. So this is a phase where FMCG companies are going to find it difficult to pass on costs. Grammages has been reduced to the bare that they can. It's going to be tough for them for sure. And what's worrisome? What's worrisome is that they're not being able to come up with anything in terms of reach and distribution without any capital expenditure. In fact, Nestle has a massive unit coming up in Ahmedabad, near Ahmedabad, which they plan to kind of keeping demand in mind, and of course things don't look as bright at this point in time. So some of the balance sheet issues will also kind of be impacting some of these companies. I would venture into anything other than ITC within this space, because as I said, it's far more insulated of business models. So stick to that. But don't worry about inflation being such a major evil that it's not going to be overcome at some point in time. So when the tide turns, you could start looking at them. Otherwise, they could be in for some time correction as well, apart from the price correction that you witnessed.
All right, Prakash, thanks very much. Good speaking with you as always. Appreciate you joining in, and thanks for taking out the time and being here. Well, the market's picking up a little bit more in terms of a momentum on the downside. We've not quite yet broken yesterday's low, which was 16,987, but we're very close, just hanging by a thread. 17,013 is where the index is at, just 20 points away from, not even 20 points away from the lows that we saw yesterday. So it's exactly, I mean, it's in a way an inside day, of course, unless it accelerates on the on the downside. The high is slightly under yesterday's high, and the low is just under yesterday's low so far, with the full, 40 minutes to go for trading. Our Alpha Manager of the day is with us. Aditya Sood of InTrade PMS is joining in. Aditya, good to have you with us here. Thank you very much for your time. Again, I mean, first a quick comment on what is this sell-off all about. Is it really what is about US banks, Aditya? Or this is a continuation of what we'd seen earlier, what we had been seeing earlier? Just FI selling, probably to buy cheaper markets elsewhere. What's the big worry? Yeah.
Frankly speaking, I think so. It is a combination of both the things, because obviously US banks going down gives you some bit of a jitter, basically. But what we have seen is that, the Indian economy is fairly insulated, both from a banking standpoint, and it all depends upon how quickly the Fed steps up in terms of ring fencing the banks which are troubled. So obviously we are in a phase of heightened volatility, but if you carefully look at what has happened to asset classes last year globally, we had a big sell-off in bonds which has not happened in the last 70 years. People ended up losing money there. People lost money in currency. People lost money in crypto. People lost money in FANG stocks. And we were seeing, some bit of a respite in the sense that, calendar year, we have seen most of this, rallying, FANG was up, crypto was up. Ideally speaking, I think so India has held up well, despite this sell-off or this continuation of the trend of FI selling. I think so this continues to be a market wherein we have seen very large divergence between the headline indices and the performance of small and mid-cap companies, particularly small cap. I think so this is an excellent environment to just focus on your set of companies and build a portfolio. I think so this too shall pass. That is the view that we have purely on a bottom-up basis. What we also see is that demand is holding up reasonably well. Plus, what has happened is that something has to go up. You cannot believe that we continue to be in an environment wherein inflation will continue to be high, and you will have at the same time, if the growth is slowing down, something has to give up. To my mind, I think so. The way energy is behaving now, I think so. Inflation expectations will clearly readjust to the new normal, and that is what clearly the Fed terminal rate is also indicating now.
Aditya, I remember in our last conversation, you had spoken about how you're very bullish about Tejas Networks, and the addressable market opportunity is so much higher for Tejas Networks, double of what it is currently today. Another stock in your portfolio is Intellect Design Arena. Now, the stock price is at 400 rupees. Its high a couple of years ago was more than 950 rupees, which means it's more than halved. And this whole transition from a products company to platforms has, hurt the company's revenue growth, the kind of margins it used to report. Your thoughts on Intellect Design Arena and why you continue to remain optimistic?
So there are two elements to the story, I think so. The first element is that, we are trying to reassess. There is an element of earnings cut, which is coupled with multiple cut as well. So if you look at, Intellect specifically, what essentially happened is that, there was a turnaround, stock rallied from 100 to 950. Now what we have seen is that, the stock multiple was very, very steep. It was trading, in fact, at 35 times forward at one point in time. Today, what we find interesting is that the valuations are much more reasonable. Obviously, there is a cloud transition which is going on. Obviously, it is, having a very large, pretty much all the exposure is towards BFSI. So our view is that, there is a limited room for multiples to be cut. Obviously, we have seen, some sort of growth also tapering out. But this is a clear-cut example of a company wherein, one has to take a 2-3 year view. So what we are saying essentially is that, there is a limited downside in the stock. Risk to reward is very, very favorable. Ultimately, what a PMS should do essentially is to look at a 3 to 5 year story. So in most of these companies, what we are seeing is that, the total addressable market is expanding as they, move towards cloud migration, and as they, have US as an important geography in the phase of, growth. This is going to be, a very, very large total addressable market for the company. So clearly, multiples cannot be cut from here on. That is what our belief is. And obviously, earnings growth should support the stock.
Okay, so, that's one particular view. Aditya, you also have, I think, Tejas Networks in your holdings. Give us some thoughts over there, and whether you would be happy to add more on the defense side. How do you find valuations right now?
So valuations have got, two elements as far as, again, clearly an example of, a total addressable market being, far higher. So when we started to look at the stock, possibly the BSNL contract was looking like 8,000 crore opportunity. It possibly is going to be a 12 to 13,000 crore opportunity. Second very critical element for a company like Tejas is the semiconductor shortage. Obviously, they reported a loss last year. Third element is got to do with the balance sheet of the company. In the past, what we have seen is that, the working capital cycle was very elongated for this company. Now, with TCS being a system integrator, what we do believe is that, part of the balance sheet risk gets transferred from Tejas in terms of, earlier BharatNet or BSNL as a customer to possibly TCS. So our view is that, essentially this is again an example of Make in India. As you are aware that, Tejas is the second largest telecom equipment manufacturer in the country. Obviously, we have got the Chinese, there is a large government contract which possibly, they are going to bag. So our view is that, the order book is getting bigger and bigger. And then there is some element of cyclicalities of raw material costs subsiding. And this is what we clearly believe. If you look at the universe of, what we find interesting in small cap companies is that there was a lot of raw material inflation that, hurt a lot of companies. Now, what we have seen is that, it was having a direct impact on gross margins. Now we are seeing EBITDA margins getting normalized as these cost pressures, sort of subside. And that is where we are focusing on. So what this essentially means is that, the gross margin should expand, and hence the EBITDA margin should also expand for a lot of these companies. Purely in terms of valuation, the simple expectation here is that, there is a PLI benefit, there is a other income element, because obviously they are a net cash balance sheet today. So we find the stock to be reasonably priced.
Okay.
All right, Aditya, we'll leave it there. Thank you very much for joining in. You have positions in companies like Finolex Cables, company with Finolex Industries, I think, right? We spoke with the management earlier. I think Barbecue Nation is another company that is in your portfolio. And other United Spirits, many others as well. The list is on your screen right now. Thanks very much, Aditya, for joining in. The market, by the way, is seeing a bit of a washout now. So we've basically broken below yesterday's low. And this is now turning out to be a little more aggressive on the downside. The low yesterday was 16,987. And we are now at 16,983. sometimes, I mean, these things will not end without, a sense of capitulation. And if you look at the broader markets, and I'm just looking at it now, market breadth has flipped around. Declines outnumber advances by some 50 stocks, amongst the actively traded names. But in the broader names, this is okay. I mean, like yesterday, for example, yesterday declines outnumber advances some 2.5 to 1, but it wasn't looking too bad. Large, liquid, well-owned institutional names were not in that big volume-led loser category. They were more on the upside. So while the Nifty does seem to be in trouble now, and I think there is a bit of a fast-paced move which is coming through, the broader markets, I think, still holding out. 75 points now. 25 points quickly gone once yesterday's low was broken. 16,973, 972 is what we have.
But Prashant, actually, I just wanted to point out that at least right now, this is not an isolated India move. Suddenly, global markets have taken a sharp knock and for the worse. All of Europe is falling to the day's lows. The key markets, FTSE CAC DAX, are down about 1%. If you're looking at the peripheral markets, Italy, Spain, etc., they're down 1.5%. Futures in the US, they have turned remarkably lower. There's a straight 0.5% decline. I'm just checking the dollar. Let's see what the dollar is up to. Last I checked, it was still well below the 104 mark. The DXY is at 183. The dollar is rising. So it seems to be a bit of a coordinated move, across some of these important asset classes. I guess the fear factor still hasn't gone away. The market's still in that tantrum mode.
Yeah, no, a tantrum. But I think, Surabhi, just that, I mean, again, we've heard from so many people, one after the other, there's no hurry to buy, right? I mean, there's no trigger to jump in and buy, even though valuations are not as expensive they were 1 month ago, but they're not at levels where you kind of say there's little to lose, right? I think that's the other point, given the environment, which of course is also uncertain. So let's see, I mean, 1/3% lower. Will we have a close in the next 30 minutes, 20 minutes actually, well below 17,000? Or will the market be able to claw back up a little bit? I think that's the question now. If it is a complete washout, then you basically go into tomorrow's open in a very weak day, nervously watching what US throws our way. If there is a bit of a recovery, back to being flat or even slightly higher, I think you're in a slightly better place to deal with what comes our way in terms of global cues. We'll take a quick break here. We'll come back, get you a buy today, sell tomorrow calls with our technical experts. So that's coming up. And of course, we also have Mayuresh Joshi joining in for more market talk on the other side.
Well, for what it's worth, there seems to be a big struggle to try and sort of claw back towards the 17,000 mark. Bulls are not having much success with that. Just there's a lot of momentum on the downside, and the weight is only piling on. Mitesh is back with us. Mitesh, I guess, there is no bottom, there is no ground in a market like this. Just when you think it'll be a quiet kind of an end to the day, you get that additional 30, 40 point onslaught on the way down. Your thoughts and final strategy?
So with that about, I think the worry is that we're also on the verge of breaking the 16,970, 950 zone. So in that sense, I think, we might be in for more declines to about 16,800 levels or so. So we are now looking at one buy and one sell call. GMR Infra is a BTST kind of call, still holding out nicely. So keep a stop below 40 rupees, 70 paisa, 40 rupees, 80 paisa, 75 paisa, sorry. And look for a 42, 43 kind of a target for tomorrow. And Godrej Properties, STBT with a stop just about 1101 for targets of 1,070.
Got that. Mitesh, why 16,800 such a strong support for our markets?
See, I think the idea is that the medium-term charts are weak, Rima. So eventually, I think, they might give away. But given the fact that we have started declining from 17,800, for 5 straight days, we are having red candles and oversold. And then 16,800 is a gap area, which is where also we made a low in October of 22. So combine that, I think there's a strong chance that we'll see some kind of arrest of the decline coming around those levels.
Okay, all right, Mitesh. Thanks very much for that. Any stocks before we let you go, actually? Any other?
No, I think just as I said, I think we will want to add some put options on the Nifty because 6970 looks like giving away.
Okay, got that. So stick to some of those index strategies. And thank you very much for joining in, Mitesh. We'll see you again with the markets tomorrow. Well, the global situation isn't looking any prettier either. Let's get some perspective on this. Jan Lemgrutz, Global Head of Financial Markets at Rabobank, is with us. Jan, thanks for joining in. There's no let-up. Europe is down right now. US futures are down once again. What do you think this is, despite all the assurances from the US government? So is this markets really just trying to force the Fed's hand and, getting that 50 basis points rate hike down to 25 or maybe even 0 next week?
Yeah, the market is jittery. We have seen rates, of course, go one way and then completely the other way. I think overall, though, the market has calmed down a little bit. They realize that SVB, the Silicon Valley Bank, is not a systemic threat. They realize that the Fed, the FDIC, has done just about everything it can. And also they must realize that there's a separation here between monetary policy and particularly policy setting of rates, so your policy rate, and actually financial stability. So if you look at the program the Fed's put into place, with the pledged collateral at par, the mark-to-market has been suspended, that should be sufficient for the moment. And even if it's not, and there's another bank that comes into trouble there, another mid-sized vendor, they could just up their program. The question really is, with inflation still at a multiple of where the target of the Fed is this a hill they want to reverse on? Because then inflation will really become entrenched. So in our mind, they are still solidly on course to at least do 25 basis points. CPI and employment report also suggest as much. And they will keep an eye on this, but there's other tools to deal with this. And it should also be a situation that is relatively contained, as SVB and a couple of the other lenders are a unique proposition, but risks that simply aren't present in systemically important banks.
Jan, what are your clients doing? Are they looking to sell the US markets even after the kind of fall that we've seen? Or do you think now they're saying the fall has been a bit excessive, let's wait it out? What's happening on the flows front?
Now, if you look sort of at the past couple of days, we've had both a massive move on one side and then a massive reversal on the other side. So it's clearly that in the markets, now people were nervous initially, trying to figure this out. There is some talks more high on the horse about what does this do to moral hazard, et cetera, but there's also a dawning realization that this probably means the Fed and also the ECB are still on course to tighten policy rates, as just should be seen as more or less divorced from the SVB situation. It's never as simple because there are always question marks, you never know, but that seems to be the leading thought here. And if we take it to Europe for a moment, of course we have the ECB tomorrow. Yeah, there's growing evidence they will just go to 50 basis points. Of course, the dogs will discuss this, they'll use this as an argument, but probably the hawks will win the day here still. Go ahead under 50 basis points. Bearing in mind, inflation is still uncomfortably high, and bearing in mind, of course, that the European banking sector is very differently organized. And while there may be some weak links there that are worth watching, it isn't such that SVB transfers over one-on-one.
Jan, though even if they hike, right, on by 25 basis point in March, that, of course, is tightening, so markets may not like it. But if they don't hike and, in a way, give in to the current fragile situation, the markets might kind of make it to be about how bad the situation is, that they've kind of abandoned what they've said they'll do, which is not stop till inflation gets under control. So in a way, give up midway because things are so bad. Is that a fair assessment? Or you think, I mean, they can achieve not hiking, doing nothing, and pleasing the market as well?
Yeah, I think you're spot on with your first part of your assessment there. Inflation is still a multiple, both for the ECB, but also for the Fed. When they look at their domestic economies, inflation is at a multiple of where their targets are. They have been late to the game. They are now catching up. They've decided that rebuilding their, keeping inflation expectation under control and rebuilding their credibility is key. They're willing to risk or even have a recession over that. Of course, financial stability is something to take into account, but it shouldn't depend on this latest policy hikes. It will be dealt with other instruments like that fund and other instruments they can come up if need be. It's just not the hill they want to reverse on. It will be hard to see. And the next risk would be that if they were to suddenly pause or suddenly reverse, people are going to ask, what do they know that we don't? right? I mean, you're telling us this is under control, but you're taking some sudden reversal, a complete divergence from the path you previously were on. I think Keynes said, when the facts changed, I changed my mind. What would you do? So obviously SVB is a new fact. At the same time, they got the tools to deal with that. Any other step, a pause or reversal, smacks of panic that would be counterproductive to the narrative that this is under control and contained.
Jan, we'll leave it at that. Thank you very much for joining in. That's the view coming in on Rabobank. For the market, still down 400 points in the sensex. The Nifty is now well below 17,000, 71 points lower. Mayuresh Joshi, the head of equity research at William O'Neill, is with us on the show now. Mayuresh, afternoon. Wanted to get your thoughts in on PVR. Is this a stock that you track? Yesterday, they held their first investor meet post the merger with Inox, and they did indicate that they will continue to add about 200 screens every year on a base of 1,600 screens. They're targeting the South market as well, and they're confident about EBITDA savings of about 200 to 225 crores rupees. What they said, did it excite you?
Afternoon, Rima. I think two aspects to the whole story. I think one, specifically after post-COVID, a few of the launches were not well received. The last few, including Brahmastra and Pathan, were very well received by the box office. But I think a majority part of the movies have probably not done well. A slew of South Indian movies have actually done well. So to that extent, the opening up of more screens in the southern part of the country makes logical sense. The other aspect in terms of the entire merger dynamics and the revenue and cost synergies that can probably come through should start getting reflected. But the entire perspective, Rima, depends on content. I just met a very senior veteran from the industry itself. His view is that the content that the industry has got, which is accumulated during the COVID phase, is still stale. And to that extent, I think the new releases which come through in the next few quarters is still going to be the old content itself. So again, I think more of a trading bet, in my opinion. It's all content which will do the re-rating of these things.
Okay, all right. Let's take a very quick break on that note. We'll come back, have some more questions for Mayuresh on the other side, and then take it to the close. Okay, we're down to the final 2 odd minutes of the day, and a day, as Prashant says, that will go down as another disappointment for the bulls. We are practically at the lows, 16,968, 67. The only solace is that perhaps this is not just an India-specific problem. As we just pointed out, markets across Europe have turned sharply lower, and futures on Wall Street are also lower, at least for the time being. The culprits, well, the Bank Nifty for sure, because the Bank Nifty is looking at a loss of a whole 1%, so there is no let-up on the selling pressure on financials. Some of the names include SBI, Axis Bank, ICICI Bank, all of your biggies, IndusInd Bank, all of them are down between 1 and 2.5%. Then there is Bharti Airtel and Reliance. There was a telecom-related news. Both the stocks finally are ending lower, though Reliance started its journey with a 1% gain in the morning, but all that turned very quickly, and the stock's ending down at the lows of the session. FMCG names didn't help matters much, so Lever, Nestle, Britannia, all staring at losses of about 1%. Move to some of the discretionary consumer names like Tata Motors and Maruti. Bajaj Auto, so lots of weakness here on the auto side of the screen as well. ITC was also down by about 0.5%. Some gains on metal stocks like Tata Steel, and Rima, some gains for the Adani Group, but otherwise a pretty red screen.
Yes, Adani Enterprises up 5.5%, Green up 5%, Adani Ports up nearly 4%, and the others as well spiked up towards the end. So Adani was quite active in trade. And on the point about metals, the Nifty Metal Index is going to go home with a gain of 1.7%, with individual names outside of the index like Nalco, SAIL, also higher in trade. On the losing side, banks outside of the large caps that you spoke about, RBL Bank, Bank of India, struggling quite a bit. PNB too, down over 1%.
I mean, I guess no point looking for supports. Let the market tell you what it wants to do and then kind of follow the price action. That's the only thing you can do if you're trading. And of course, if you're investing, you stay invested. You see the portfolio bleed a little bit, but keep the faith. 16,974 is where we're at in the Nifty. It closed. I think there'll be a little bit of adjustment, but not much because there was a bit of pullback. So maybe a few points more on the downside in the adjusted close. But we'll see. But it's a poor close once again. 4th day in a row, big cut. and about 750 odd points is the total damage over the last 4 days. It's a wrap on this edition of Closing Bell, but don't go anywhere. Our special offering, Global Dialogues, comes up next. Stay tuned.